Are you tired of trying to trade the fast-paced, volatile Forex market? If so, then position trading might be the strategy for you. In this video, I'll show you how to combine two powerful indicators. We're going to use the moving averages and relative strength index to identify long-term trends. In return, we're going to make informed decisions and make a lot of profitable trades. Alright, so let's just jump right in, and the first step you need to do is identify your investment horizon. Because position trading is a long-term approach, knowing which currency pair you're going to trade or how long you are willing to keep the trading position will help you manage your trading position much more efficiently, I can guarantee it. So the first thing you need to do is choose an appropriate time frame on how long you're willing to hold your trading position, and choose one currency pair that you're willing to put all your focus on. Next, set up your charts for the moving averages and RSI indicators. You can use a variety of settings for these indicators. A common approach is to use two moving averages, which is the 50 and 200. This will give you a longer term and shorter term direction trend, which will help you identify key levels on your position trading. RSI settings should be set as default, and the default period number is 14. So while we have everything set up, let's take a look at our charts, and the first thing we want to do is identify the trend. If the 50 period moving average is above the 200, this is considered to be a uptrend, and vice versa. If the 50 moving average is below the 200, this is considered to be a downtrend. So once you've done with the moving averages, we have RSI. Use the RSI to confirm the strength of the trend and potentially identify overbought and oversold zones. If the RSI indicator is telling you it's above 70, this is considered to be overbought, which could potentially indicate you that the trend is stopping, it's slowing down, the momentum's not there, and it might start trickling down. And vice versa, if the RSI is below 30, that means it has been oversold, which could indicate that the trend is gaining momentum and it could be going back up. Once you have identified a trending currency pair and have confirmed the trend with the RSI, you can consider entering the trade. So here's the position trade that I actually took, and this is the CAD Swiss franc currency pair. Now, as you can see, I've drawn some support and resistance lines. We have our two moving average lines just over here, and we also have our RSI indicator at the bottom. We can clearly see that the last 4 months it gave us two bearish engulfing candlesticks. This is a strong signal to go towards the downside. After we've done analyzing the monthly time frame, you want to go to the weekly. Let's take a look. Nice little trend over here was broken with this bearish engulfing candlestick once again, breaking past the two moving averages and also making a new lower low, passing all the supported levels, which also indicates strong bearish pressure and momentum. Now, this is the daily time frame, and this is where you could consider entering your trade. We had a nice little push exhaustion scenario, dipping down lower, and our RSI is not yet reached the 30 level. Now, the daily time frame RSI might be a little bit less accurate than the monthly. Because it's the lower time frame, the potential corrections might not be as big and they won't take you out of the trade. That's why you should only look for the higher time frame RSI indicator, such as the monthly and the weekly. To give you a quick example, this is what the monthly time frame RSI looks like. It's in the middle, it's not overbought or oversold. It's a great position trade to take. Now, this is the 4-hour time frame. This is the lowest ever you want to go. But if you're struggling to find entry on the daily, you might consider looking at the 4-hourly to see what's going on. And as we can see, we have developed a bearish engulfing candlestick of the 50 moving average. This is a great indication for further bearish pressure and momentum, and the RSI indicator on the 4-hourly time frame is not yet oversold as well, which is absolutely perfect. This is a great trade. Okay, so we like that everything is trending towards the downside, monthly, weekly, daily, and even the 4-hour time frames. So we might want to consider entering this CAD Swiss franc trade. So what's important? We need to set set clear stop loss and take profit levels. Now, what I recommend from personal experience, if you are on the 4-hour time frame and we have our stop loss level covering the 2 moving averages on the 4-hourly time frame, it's a good start. Now, if you have that, make sure to head over to the daily time frame and see if the 50 moving average is also being covered by the stop loss, because sometimes you might have a daily pullback that could be a little bit more than 100 pips and you might get stopped out. That's why you need to cover the 50 moving average on the daily, because usually the market really reacts to the 50 moving average. In this case, I have allocated 200 pips for this position trade. It's covering my 50 moving average on the daily and covering my 2 moving averages on the 4-hourly. Now, for your take profit level, you want to have 2-to-1 to 3-to-1 risk reward. I chose 3-to-1 because I believe that this trade will continue falling down. The last thing you need to do is carefully consider what lot size you're going to trade. Now, what lot size you consider entering your trade is up to you and your account balance. Since I don't know that, I'm gonna leave a link down in the description below. It's a lot size calculator and it will give you important information to understand what lot size you should be taking with the account size you actually have. So once you have calculated everything, you're ready to go. So as the trade unfolds, make sure to monitor it closely and adjust your take profit and stop loss levels as needed. For example, if the trade is going in your favor, you might consider moving your stop loss to break-even point or even to a point of profit to protect your gains. So this is my actual trade on CAD Swiss franc. As you can see, it's currently going up and broke past the 50 moving average. Now I have set my stop loss level just above the 200 moving average. If it's gonna take me out, that's fine, but I do believe he has a chance to move down lower. That's why I'm keeping it open. Now, some mistakes I made when position trading. I didn't take any money at all, so I didn't close portion of my positions, which I should have. I was pretty greedy and I was looking at some fundamental news and I thought that we might have a huge dip towards the downside, but we didn't. So if you're gonna follow this guy, make sure to take some money every single time you reach a milestone. I don't know, maybe every 30 pips you consider taking 5 to 10% of your lot size position and consider running the leftover position for further pip gains. A very important thing to mention, to be really successful in position trading, you need to know a lot about fundamentals. This includes being able to evaluate economic and political factors that could influence the value of a currency pair, whether it's negative or positive. Some pro tips: most important news is GDP growth, interest rates, and just political stability. So being a well-informed, rounded trader is much more important than just position trading randomly, only using technical analysis. You need to have the fundamentals correct and combine them together to make it all work. It's like a chef making a nice soup. All the ingredients have to be there. So what's my thoughts? Overall, position trading is very rewarding and can be extremely profitable when done right. For those who are willing to take a long-term perspective and put time and effort to research and analyze the market, you're going to do well. Now, if you're looking for a trading community that's super supportive and welcomes everyone, make sure to join us. Link down in the description below. And if you're looking for another video to watch, this one's great. And make sure to like and subscribe. See you later. Take care and goodbye.